Hey, it looks like we're back on. Hello, and welcome back. I'm happy you're joining me again. This is the start of the new year. We're looking at January 2nd right now, as I'm doing this in the morning, trying to get this out. As you can see, my newsletter is coming out. The guy's delivering the newsletter right here, and we'll go through it in a second. But for new people that are joining us, I welcome you here. Again, I want to wish everybody, first of all, Happy New Year. Hopefully things work out the way you want it. And I hope you guys stayed safe and really enjoyed the time off. Anyway, let's talk about the market, because really that's what you're here for. You want to talk about the market. You want to talk about what's going on with the real estate all in all. Well, in overall, the real estate is doing great. It's doing great primarily because listing inventory is low. The reason for the low listing inventory has always been, and it's been for the last, a couple of years now, is the fact that, people who are in their house, they probably got it for a very low price. They're paying very low taxes. That was the initial reason. And now the primary reason was people don't want to let go of their 2.5-3% mortgage and buy something else and go into a 6.5% mortgage. Because everything is driven by two things. That's supply, demand, obviously. Demand is still there, although it has cut down slightly because of the rates. But supply is supply. You can't have nothing to do with that. And I can tell you that based on the regulations that California is putting out, based on the cost of permits, they're astounding. Based on labor costs, I just don't see that builders are able to build homes for anything less than $700,000-800,000 at the minimum and make any money on it. That's why you're seeing a lot of homes that are being put out there are really over $1 million, unless you're looking at townhouses. Okay, so really this is the story. It's been the story for a while. It's continuing to be the story. I'm going to switch right now just to show you what I got for let's see, here we go. Let's jump on here. Let's get rid of this here. Okay, so rates have been going down. As you can see, we kind of peaked out November. We were up, I know it's showing 7.79, but like I said, that's with seller paying their own cost. The mortgage rates were way over 8%, closer to 8.3, 8.4, and that really cut a lot of people out of the market. A lot of people who were able to buy before had to probably rent again. And I think you're going to see this whole phenomenon because a lot of people had to re-sign the leases. A lot of times they're 6 months here, a year lease, so you're going to have a little smaller buyer pool of those people who were able to buy, let's say, 3-4 months ago. So we're going to have to let that work out. But the rates, as you can see right now, they're down to 6.61. I think the actual rate is around 6.8 if you want to have the cost kind of built into it so you don't have anything out of pocket. So, things are obviously improving. The only issue is, again, people are sitting on loans that they got where they're 2.5-3.5%. And for them to really let those go and buy something at 6.5%, 6.75 is going to be an incredible increase in what they're paying. Now, if they can afford it, obviously they're going to do it. If they need a bigger house, they'll probably take it on the chin for a short while and hoping for mortgage rates to drop and refinance at this point. Because remember, not only our mortgage rates have gone up and their payment goes up, they're also probably going to be buying a more expensive house. So let's say they're in a house that they bought for $600,000, now they're selling for 1.2. So when they buy the next house at 1.2 or 1.4, that tax is going to be established based on that purchase price. So they're going to be paying quite a bit more money. By the way, I'm not sure if I did this yet or not. Let me just click out of here. Sorry, I have to do some things here. Let's see, just in case I haven't flashed this yet. I think I might have, but my name is, again, Leo Orzhel. I'm a broker owner with Realty Max, and we are operating here of San Marcos. We do take care of take care of wherever we are referred to, but primarily I try to stay focused on Discovery Hills and Santa Fe Hills are two places where I have a lot of interest, and I've been doing this for a while. So let's talk market itself. Let me just switch here 1 second. Okay, so I'm back. So basically, this is what I'm covering in the newsletter. We're covering obviously what's happening with the market, how interest rates have really impacted the market, how this is going to continue impacting the market. And also, like I said, a lot of people don't realize I'm putting a video out every month because I want to really fill in a lot of information that you're not getting in 8.5 by 11 sheet. It's just impossible to do that. So that's why we try to do what we have to. I'm not sure what's going on. Oh, here we go. Sorry about that. Technical difficulties. So I mean, obviously I can't put a lot of information in a small sheet, so I'm giving you some highlights, and really the video is about filling things in. What else do I want to talk about? Let's see. I want to talk about buying. A lot of people, again, have relatives, have kids, and like I said, they're not buying the property because some people still hope for the market to drop down. I mean, they literally are hoping for the market to drop down. I can tell you right now, I don't care how much you're hoping, it's not going to happen. In order for that to happen, we have to have a lot of foreclosures. We have to have a lot of people upside down, and that's not the case. And ultimately, there's not inventory. In order for the market to shift and really crash, things need to happen. It's not going to happen. So it's wishful thinking. I can tell you right now, based on what I'm seeing, and especially if the rates continue going down, this market is going to, again, continue going up and up and up. Because, like I said, no inventory, that's the supply side, and demand is still there, so people are going to continue looking for houses because they're going to see if they don't buy it now, they're probably going to be biting their behind next year because they're going to see the prices have come up another 10%. So it's just something for them to do. Anyway, so let's look at the market, because I actually didn't cover, or I kind of screwed up on this. In the back, you're going to see stuff that went on and off last month. That's last month's newsletter. So let's cover to see what's going on. Okay, so I got this back up. So we're going to cover some of the real estate that obviously sold. As you can see, sold dates of December, so you're going to get fresh information. We're also going to look at see what's actually on the market. So let's start with trail side. Now, it's amazing to me that we still have some properties that have been foreclosed a long time ago. In fact, this property was foreclosed, looks like 2020. And now the bank has put it back in the market. Let me just minimize some things because some private remarks here. I'm not supposed to show it to you, but ultimately this is Trailside Place, 793. Looks like they were asking $1,248,000 at one point, and they dropped it down to, let me see if I can make myself smaller. Oops, wrong way. Okay, so as you can see, they dropped it down to $1,248,000. So again, this is a 2,800 square foot property. As you can see, right? You can see some pictures. Not lived in, needs a lot of work. So, and this is bank owned, so bank's going to try to go high. And as you can see, it's been on the market for already 48 days. And if you follow me, you already know that 2-3 weeks on the market's basically a death wish. You're going to have to start dropping the price and start really catching the market down, or chasing the market down is the right proper wording. So as you can see, this one, so if you have someone that's looking for it now, it cannot be investor bought. Apparently this is under certain it's called California First Opportunity Program, where first-time buyers have some exclusion here. They try to get first-time buyers in, but again, at $1,199,000, which is the current price, I just don't see a lot of first-time buyers in that. So we'll see what happens to this. Let's look at the next one. This one is on Apple Wild. It looks like it's under contract. It's still active. $1,050,000. What that means is whoever wants to buy this property probably has a property to sell. So most likely, I don't know 100%, but most likely this is going to be a contingent offer. So we'll see what happens. We'll follow on that. So let's look at the next one. This is one sold on Echo. This was a probate, by the way, listing in Buena Vista. And this was on Echo, 534 Echo. Again, 55 days in the market. They went from $1,350,000. They dropped it to $1,290,000, another $60K. It looks like they have a connection hookup here. So it is an escrow. Like I said, Buena Vista is the gated community right across CaDRE. So most of you are familiar with that. Looks like it's in good shape. But a lot of people have an issue with a death in the property. So it needs to be disclosed. Okay, so here's another one, Overlook. 850 overlook. It's closed. This closed looks like I just have this information right here. Let's see, closed. Let me go back really here. This one closed. Echo. Overlook. That closed looks like 12/11. So beginning of last month. It was a 3-bedroom, 3-bath, 1911, as you can see, right? 1994 built. 1,000,001 was asked for. They closed at 1,115,000. They got 15,000 more. 6 days in the market. We have another one, our Gardenia, that closed 12/19. It's a 4-bedroom, 3. It's right here. Okay, so looks like they asked for 1,099,000. They were able to get 1,135,000 on this one, and this was on the market for 8 days. It looks like it was actually getting ready for a long time. I mean, like I said, I think if you want to look at the pictures, we can do that here real quick for you. Good shape, doesn't need a lot of work. Looks like the kitchen has been upgraded, or updated, I should say. Well, looks like this needed some updating, as you can see. Oops, sorry there. Let me get care of this. So as you can see, this was updated here, or needs updating, I should say. Nice yard. So like I said, looks like some areas do need to be updated still, but it closed at 1,135,000, under 2,000 square feet. So you have an idea what's going on. Okay, this one is Echo Lane. This again, Blvd. This one is, sorry about that. This one is, looks like they were asking 1,004,000. It was 87 days in the market. Let's see, they got 1,375,000 for it. Big house, 3,370 square feet, built in 2002. And it looks like it was being sold. Oh, it's got some staging going on here. So it looks like some partial staging from what I can tell. But like I said, it's a good area. It's gated community. So, you know, people like that. So that's all there is for the whole neighborhood here. I think that's pretty much it. That's all I have for you. And ultimately, let me bring myself back here. So again, if you're looking to sell, you know, if you're looking to sell your house, there's so many ways you can do that. One of the ways you can do this, again, is the traditional way. We don't use the traditional way. We use a process I call, as you can see right here, n72.com on the bottom. If you want to get more information on it, you can go to n72.com, get it. But basically, ideally, there's two items or two things you can control during the sale. There's supply and demand. Obviously, we cannot control supply. We can only control demand. Our N72 process allows us to really influence demand. I know, make it as hype the property as much as we can, because what happens is we put the home on the market and we don't show it as traditional agents do, where they show it whenever the buyer wants to see it. We don't feel that is conducive to getting more money. We'd like to get the juices flowing for the market and really get as many buyers in as we can, and all buyers are approved at the same time. We only do it for an hour and a half most of the time, and we're able to get offers way above market price. And that's why we have, if you looked in the newsletter, you saw the heading, we guarantee results, we're going to guarantee multiple offers, we guarantee you're going to get up to 15% more using us. We've hit 30% at some point last year. So we do what we say we do. Otherwise, like I said, it comes out of our pocket. Anyway, if you have any more questions, if you have mortgage questions, we do loan originations. If you need to refinance, feel free to reach out. Again, I want to wish everybody a happy new year. Have a wonderful day, and I'll see you on the next one. Thank you.